You probably don't think much about your water heater until it breaks.
Right.
It's usually tucked away, out of sight, out of mind.
Exactly, until you get that cold shower.
Ah, yeah, exactly. But what if I told you that this often overlooked appliance and the company that really dominates its market is currently right at the epicenter of some major global economic shifts and a massive decarbonization megatrend and, well, of a truly fascinating corporate drama unfolding across continents?
It's quite a story hidden behind something so seemingly mundane.
It really is. Welcome to the Deep Dive. Today, we're taking an in-depth exploration into A.O. Smith Corporation, ticker symbol AOS. They're a formidable leader in global water technology.
Yeah, real heavyweight.
Our mission today is to understand how this century-old company is navigating what looks like a truly pivotal moment. They're balancing this highly stable, immensely profitable core business in North America,
Which is their rock, really.
with the volatile, high-stakes challenges and, honestly, some exciting opportunities of its international operations.
And what's truly fascinating here, and I think what makes this deep dive so compelling, is how a company with such a deep history, like decades of reliability and established market leadership,
Yeah, a trusted name.
is now facing such profound, rapid changes. This isn't just a story about appliances,
Not at all.
It's really a window into how global economic forces, technological innovation, and even strategic geopolitical shifts are all converging to shape a single enterprise.
Wow.
So we're going to try and extract the crucial insights you need to understand its current state, its future trajectory, and maybe most importantly, why its story matters in the broader global economy.
And where are we getting this info?
Right. So this deep dive, our insights are built on a comprehensive investment research analysis. We're drawing from detailed financial reports, extensive market studies, and of course the company's own public disclosures.
The source document.
Exactly. We've distilled all of this down to bring you the most important nuggets of knowledge. The key takeaways that go beyond just the headlines.
Okay, let's unpack this giant then. A.O. Smith. It's a name maybe many might not immediately recognize on the street,
Probably not, no.
but I guarantee you've interacted with their products, or at least the result of their products, very recently. They are a massive player in an absolutely essential industry. So what exactly do they do, and how have they built such an incredibly strong, stable foundation over, more than 100 years?
Yeah, it's a long history.
Well, at its core, A.O. Smith is a global leader in water technology, and their reach might surprise you.
It's extensive.
They are a premier manufacturer of residential and commercial water heating equipment. So that covers everything from, like, the standard tank you might have in your basement
Classic water heater.
to high-efficiency boilers for large buildings. But they're not just about hot water anymore, right? Increasingly, they offer a comprehensive range of water treatment products.
That's that growing piece, yeah. Making sure the water you drink and use is clean and pure.
And this isn't some fly-by-night operation that popped up yesterday. They boast over a century of expertise, founded way back in 1874 in Milwaukee, Wisconsin.
A long, long time ago. Very established.
Their scale is genuinely impressive. They operate extensively, approximately 12,700 employees worldwide, serving customers in around 80 countries.
That's global reach.
And when we talk numbers, we're talking annual sales exceeding a hefty $3.8 billion.
Not small change.
And they also have this distinguished legacy of innovation. They've been consistently applying cutting-edge tech and energy-efficient solutions across their whole product portfolio well before green was, the buzzword it is today.
They're kind of ahead of the curve in some ways.
Think of A.O. Smith as like the critical plumbing backbone for homes and businesses globally. Essential, reliable, but often unseen.
Yeah, similar to how we might take clean hot water for granted until it's not there.
Exactly. Then you notice.
You definitely notice. And if we zoom in on their operations, it's really their North American segment that forms the company's powerhouse. It's the bedrock of their financial stability.
Engine room.
Pretty much.
Yeah.
A.O. Smith isn't just a participant here. It's the largest manufacturer and marketer of water heaters in the United States and Canada. They hold a commanding market share in both residential and commercial markets.
Dominant.
Very dominant. And their product breadth is quite impressive. Everything from those traditional gas and electric tank type water heaters most people are familiar with to advanced high-efficiency boilers. And importantly, as you mentioned, they've been strategically expanding into that growing suite of water treatment solutions.
Right? They didn't just invent those.
No, they meticulously built that through smart acquisitions over the past decade or so. bringing brands like Aquasana in 2016, Hague in 2017, and Water Right in 2019 into their portfolio.
Smart moves.
Very strategic. Now, if we look at the broader context, the North American market for water heaters is undeniably mature, right?
Yeah, it's not like a booming growth market inherently.
Exactly. You're not seeing explosive population growth driving demand like in some emerging markets. However, its stability is just a crucial foundation for A.O. Smith.
Okay.
And this stability is underpinned by what analysts call a non-discretionary replacement cycle.
Non-discretionary, meaning?
Meaning for you, the homeowner or business owner, water heaters, like any major appliance, have a finite lifespan. 10, 12, 15 years maybe.
They don't last forever.
They don't.
Mm-hmm.
And when yours breaks, it's not really a luxury purchase you can put off.
No, you need hot water now.
You need hot water, and you need it quickly. So this creates a consistent and highly predictable stream of demand that isn't nearly as volatile as, say, new housing construction might be.
Ah, okay. Less tied to the housing cycle.
Much less tied to the ups and downs. Even in a recession, people still need hot water, right?
Sure.
This dynamic makes the North American segment the company's primary profit and, crucially, cash flow driver. Just look at the numbers. In Q2 2025, for example, this segment generated $779 million in sales. Wow. With a really robust operating margin of 25.4%.
That's a healthy margin.
Very healthy for manufacturing.
Right.
Now, sales did see a slight 1% year-over-year decline in that specific quarter, but there's a nuance there.
Okay.
It was partially due to customers pulling forward purchases, basically buying ahead of announced price increases.
Ah, stocking up before the price went up.
Exactly. But even with that slight dip, their commercial boilers actually showed strong underlying performance, increasing sales by 6%.
So it's still strong underneath.
Yeah, it demonstrates the inherent resilience and underlying strength of this core business, even when facing minor temporary shifts.
That level of stability and profitability in North America is certainly impressive. It really does sound like the bedrock for the company. But, does relying so heavily on one region also present maybe a strategic risk?
Well, it's always a question with concentration, right?
Yeah. What happens if that core market faces some unexpected, prolonged downturn? It's a powerful position, but it also highlights why that international diversification, even with its challenges, is important.
Exactly. It underlines the need for those other growth engines, even if they're currently more complex.
And it's not just about what they sell in North America, but how they sell it. They seem to have truly mastered how they get these products into the hands of customers.
Oh, their go-to-market is key.
Yeah, from the largest commercial client down to the individual homeowner. Their strategy is incredibly sophisticated and diversified. It's what they call a multi-channel approach.
That's right. It really covers all the bases.
So this includes direct sales to large plumbing wholesalers.
Yep, that's a critical channel.
Yeah.
Because those wholesalers serve the professional contractors and plumbers.
The pros who do the installations.
Exactly. And those pros are essential for those non-discretionary replacement sales we just talked about.
Yeah.
They're often the ones recommending specific brands, right?
Makes sense. The plumber's recommendation carries weight.
Huge weight. Then, they also have strong relationships with the major big box retailers.
Okay, so the Home Depots, the Lowe's.
Places like that, catering to both the do-it-yourself consumers who might tackle a replacement themselves.
Brave souls.
Yes, and also other professional installers who might source their products from those stores.
Okay.
And they even have specific arrangements directly with contractors for, say, larger projects or maybe specialized needs.
So they've got their bases covered, reaching everyone from the skilled pro installing complex commercial systems to the homeowner maybe just picking up a new unit at a big box store. That broad market reach touching every part of the customer journey, that sounds like a serious, durable competitive advantage, doesn't it?
Oh, absolutely. It's a huge moat. And beyond just the sales channels, they have a mastery of logistics.
Getting the product there.
Yeah, ensuring efficient and cost-effective product delivery across all these diverse channels. And that's no small feat when you're dealing with bulky appliances that need to get to job sites or store shelves quickly and reliably.
Yeah, you can't just ship those easily.
Not easily. This operational excellence is a quiet but really powerful differentiator for them.
Okay. Now, as strong and stable as their North American operations are truly the financial engine room, as you said, A.O. Smith's global story is, well, it's a tale of two very different geographies. It presents a stark contrast that reveals some fascinating corporate drama.
Yeah, this is where it gets really interesting.
On one hand, you have this major complex challenge that's clearly weighed on the company. On the other, a bright new opportunity that could maybe define its future.
A real fork in the road internationally.
Exactly. So let's start with what we're calling the China conundrum.
Right, China.
A.O. Smith has operated in China for nearly 3 decades. They've built strong brand recognition there for their premium water heaters and water treatment systems.
They were an early mover, relatively speaking.
For many years, it wasn't just a market for them, it was actually a primary growth engine for the entire company.
Yeah, driving a lot of the growth story for a while.
And they really tailored their products there, too, focusing on things like electric wall-hung units, gas tankless heaters, advanced reverse osmosis water treatment tech.
Stuff that fit the local market needs and preferences.
Exactly. It shows their adaptability and understanding of local consumers. It was a success story for a long time.
It absolutely was. Which raises the important question. What exactly happened? How did China transform from being such a robust growth engine into, well, such a significant headwind?
Yeah, what changed?
What we're seeing in China isn't just a temporary dip. The market is grappling with some pretty systemic economic challenges.
Like what?
We're talking about a protracted slowdown in the real estate sector, which directly impacts demand for new appliances and new homes.
Right. Fewer new apartments, fewer new water heaters needed.
Precisely. And alongside that, persistently soft consumer demand across the board. People are just more cautious with their spending.
It's a broader economic malaise.
Yeah, these aren't minor fluctuations. These are profound structural issues that are directly impacting A.O. Smith's performance and, importantly, their profitability in the region.
And we see that in the numbers.
Clearly. The impact has been clear in their financial reports. China's sales fell a significant 11% in local currency during Q2 2025.
Ouch.
And management's guidance for the full year 2025 projects a decline of 5% to 8% in China. That really underscores the depth and persistence of these challenges. This isn't turning around quickly.
Wow. Okay,
Yeah.
so how are they responding?
Well, in response to these persistent challenges, which have clearly proven to be more than just cyclical,
Right, not just a blip.
management announced in July 2025 that it has initiated a formal assessment of strategic opportunities for its China operations.
Okay, what does that mean? Assessment of strategic opportunities.
It sounds corporate, but it's significant. This isn't just a casual review. It's a comprehensive evaluation of a really wide range of options
I'm excelling it.
that's potentially on the table.
Yeah.
We're talking about everything from forming strategic partnerships with local players, which could leverage existing distribution and market knowledge, to exploring a full or partial sale of the business, or even other alternatives designed to maximize the value of the business for shareholders.
So basically everything is being considered.
Pretty much.
Okay.
This strategic review represents perhaps the single most significant variable for the company's medium-term outlook.
Because it's such a big piece, historically.
Exactly. The persistent underperformance and the uncertainty surrounding its future has undoubtedly weighed on A.O. Smith's overall valuation. Investors typically apply a discount for such a significant drag on growth and this kind of uncertainty.
Makes sense. So how they navigate this will be crucial.
Absolutely critical.
Okay, so China is definitely a major headache right now, a real strategic tightrope walk. But in stark contrast to that, we have what's emerging as the Indian opportunity.
Yeah, completely different story.
And that's being significantly bolstered by a recent strategic move, the Purite acquisition. India is rapidly emerging as A.O. Smith's primary international growth opportunity, a true bright spot on their global map.
The numbers bear that out.
Their legacy business in India, just building on years of foundational work, grew an impressive 19% in local currency in Q2 2025.
19%. That's phenomenal growth.
It really is, by any measure. And this strong organic growth is now being significantly supplemented by that strategic acquisition of the Purite water treatment brand from Unilever.
That was a big deal.
A smart play, it seems. Purite, even in its first partial quarter under A.O. Smith, contributed $16 million in sales.
Already making an impact.
And it's expected to add approximately $50 million in revenue for the full year 2025. This isn't just an add-on. It feels like a real statement of intent about where they see future growth.
I agree. And what's truly fascinating here, I think, is that this move isn't merely geographic expansion. It's more calculated than that.
How so?
It seems like a deliberate replication of the successful playbook A.O. Smith employed right here in North America. Remember how they built their substantial water treatment business through those acquisitions like Aquasana and Hague?
Right, buying established brands.
Exactly. By purchasing an established brand like Purite, In a high-growth market like India, a brand that already has significant consumer recognition, A.O. Smith is positioning India to potentially become its primary international growth driver,
Especially as the focus maybe shifts away from China.
particularly as the strategic focus inevitably shifts away from the structural challenges in China. This also aligns perfectly with that global trend toward higher-margin, technology-driven water quality solutions.
So it hits multiple strategic
It
points.
really does. It demonstrates their ability to spot and capitalize on megatrends, leveraging their expertise and capital in areas where they see clear long-term runway.
Okay. Now, when you look at the financials for these two geographical segments, North America versus the rest of the world, the story of contrast becomes even starker, right? There's a significant segment profitability disparity.
Oh, absolutely. Night and day almost.
The North America segment operating margin was that robust 25.4% in Q2 2025, which we talked about. Seriously healthy for manufacturing.
World-class margin.
But the rest of world segment, which includes China and India, among others, its operating margin was considerably lower at 10.5% in Q2 2025.
Still positive, but much lower.
Although, to their credit, you mentioned it held steady year over year.
It did, remarkably, and that was due to successful cost reduction actions they took in China, which helped offset the impact of those lower sales volumes there. So good management even in a tough spot.
Okay, managing costs effectively, but still, that big gap in profitability.
It tells a clear story.
You're seeing a clear picture here. North America is truly the financial engine of the entire company.
Absolutely. It's generating the substantial free cash flow necessary to fund A.O. Smith's entire capital allocation program.
Which includes?
Well, its long-standing and consistently growing dividend, which shareholders love, its significant share buybacks, another return of capital, and its investments in new growth avenues like that Puri acquisition in India.
So North America basically pays for everything else.
To a large extent, yes. This financial strength, this bedrock of cash generation, affords management the crucial flexibility. They can address the profound challenges in the China market from a position of stability and strategic choice.
Rather than desperation.
Exactly. Rather than distress or being forced into moves they don't want to make. It's a pretty powerful position to be in, even with all the global turbulence, allowing them to play offense in some areas, like India, while strategically rethinking others, like China.
Okay, that makes a lot of sense. Now, beyond their internal geographical balancing act, which is complex enough,
Very complex.
the entire water heating industry itself is undergoing this massive structural shift. We touched on it earlier, this decarbonization megatrend.
It's huge.
It's fundamentally reshaping the landscape, creating both unprecedented opportunities and, well, new pressures for companies like A.O. Smith. So what does this all mean for a century-old company that has traditionally built its business on, established gas and electric tank technologies?
It's the fundamental challenge and opportunity.
Well, this decarbonization megatrend is a structural shift. It places the water heating industry right at the forefront of a significant global push for decarbonization, energy efficiency, and just overall sustainability.
It's not just talk anymore.
No, and this isn't just a slow-moving consumer preference either. This transition is being actively accelerated by increasingly stringent government regulations.
Big time.
And substantial financial incentives. Think about it. Governments worldwide are setting aggressive climate goals, right?
Yep. Paris Agreement, net zero targets.
And reducing energy consumption in homes and businesses is a huge part of that equation. Water heating is a big chunk of home energy use.
One of the biggest, usually.
So this dynamic is effectively bifurcating the market, splitting it into two distinct paths. You've got the traditional lower growth segment standard gas and electric resistance heaters.
WellGuard.
And then you have this high-growth, technology-driven segment led by innovative products like heat pump and tankless water heaters. It's a clear fork in the road for the industry.
That's a critical distinction. If we look at the broader context here, a company's ability to lead in these high-growth, technology-driven categories, which, by the way, command premium pricing.
Right, they're not cheap.
That ability will be a far greater determinant of future success than just holding on to legacy market share in traditional products.
So it's not just about volume anymore.
No, this is a fundamental shift in competitive dynamics for the entire industry. It's moving beyond just volume and market share to technological prowess, intellectual property, efficiency leadership.
That sounds like a major pivot for a company like A.O. Smith.
It is. For a company built on a century of manufacturing excellence in traditional products, this pivot demands not just innovation, but potentially a significant shift in capital allocation, R&D priorities, maybe even their manufacturing footprint.
Wow.
It forces them to become, in a way, a technology leader first and a traditional manufacturer second. How successfully they navigate that internal transformation, that cultural and operational shift, that will be the true test of their adaptability in this new era.
And a hugely important part of that shift is the rise of heat pump water heaters, or HPWHs.
The star of the show, in many ways.
These are genuinely fascinating pieces of technology, and they represent a massive leap in efficiency. Can you explain how they work again?
Sure. HPWHs function quite ingeniously, basically like a refrigerator working in reverse. Yeah. Instead of creating cold air inside and releasing heat outside, they extract heat from the surrounding ambient air. Even relatively cool air has heat energy.
Right.
And they transfer that captured heat to the water in the tank.
Yeah. So they're moving heat, not creating it directly with resistance coils.
Exactly. That's why they're so efficient. They use up to 75% less energy than a standard electric resistance water heater.
75%.
And achieve energy efficiency levels 3 to 5 times higher than traditional models. It's a game changer for energy consumption.
And this isn't just a niche product anymore, you said.
Not at all. We're seeing explosive growth. U.S. sales of HPWHs grew by a staggering 26% in 2022.
Wow.
And that's in stark contrast to a 17% decline in gas water heater sales in the same year.
That's a decisive market shift.
Absolutely signals a clear trend. And projections forecast robust compound annual growth rates, KGRs, ranging anywhere from, say, 5.9% on the low end to as high as 14.4% through the end of the decade for the HPWH market.
That's not just growth. It's like a technological revolution happening in basements and utility closets.
Pretty much. And that explosive growth isn't happening in a vacuum, right?
Yeah.
It's massively supported by significant regulatory tailwind.
Government action.
Exactly. Actively pushing consumers and builders towards these technologies. For example, the U.S. Inflation Reduction Act, the IRA.
Heard of it?
It provides consumers with a substantial 30% tax credit, up to $2,000, for buying and installing an Energy Star certified HPWH.
That's a big incentive.
It's huge. It creates this powerful non-cyclical demand pull for electrification. It's largely decoupled from traditional economic drivers like new housing starts because it incentivizes existing homeowners to upgrade.
So it helps smooth out the housing cycle volatility.
It de-risks the growth story significantly. Furthermore, the U.S. Department of Energy, the DOE, has proposed new standards.
There are regulations.
Yep, and these would effectively phase out the sale of inefficient electric resistance water heaters larger than 35 gallons by 2029.
Wow, phase them out entirely.
For the larger sizes, yes. That's a potential game changer, a regulatory hammer that could dramatically accelerate HPWH market penetration simply by removing the less efficient alternatives in the market.
So how's AOS Smith positioned for this?
They're actively positioning themselves to capitalize. They have a broad portfolio of high-efficiency products already. And management has specifically noted that their upcoming product launches are being designed precisely to comply with these new, stricter DOE efficiency standards set to take effect as early as 2026.
So they're anticipating it, building for it.
Exactly. It shows a proactive approach, trying to lead the market, anticipate and shape it, rather than just reacting to the regulations when they hit.
That's genuinely fascinating, like a mini refrigerator working in reverse to heat your water. Makes you wonder why they haven't been adopted even more widely already, especially with those efficiency numbers and now the incentives.
Well, upfront cost has been a factor historically, and maybe consumer awareness, but the incentives are changing that calculation rapidly.
Right, but it's not just heat pumps taking center stage. There's also a significant tankless opportunity that A.O. Smith is pursuing.
Also a key part of the efficiency story.
Tankless water heaters are another game changer. How do they differ?
Instead of storing a large volume of hot water in a tank, keeping it hot 204/7.
Wasting energy.
Exactly, those standby losses. Tankless units heat water instantaneously, on demand, only when you turn on the tap.
Ah, so no storage tank.
Generally, no. This eliminates those standby energy losses. These units can be 24% to 34% more energy efficient than conventional storage models.
Still big saving.
Definitely. Plus, their compact, space-saving design is another really compelling feature for consumers, especially in smaller homes, apartments, condos, where every square foot counts.
Right, they take up much less wall space.
Much less.
And the market for tankless is growing, too.
It's rapidly expanding. The North American market is projected to grow at a strong CGR of 10.2% from 2023 to 2030.
Also double digits.
And the global market expected to grow at an 8.7% CGR over the same period. Within North America, the residential sector is dominant, over 72% of sales.
So mostly homes.
Mostly homes. And currently, gas-powered models are the preferred technology, about 65% market share, although electric tankless options are also gaining traction.
And A.O. Smith is in this space, too.
Oh yeah, they have a strong portfolio in tankless as well, ensuring they're well-positioned for both major efficiency trends, heat pump, and tankless.
Okay, covering their bases on the technology front.
Exactly. But despite these strong tailwinds in high-efficiency products and the whole push towards decarbonization, the industry, including A.O. Smith, isn't immune to broader macroeconomic headwinds.
Right. The real world intervenes.
Always does. The U.S. housing market, for instance, while less critical for replacement, is still a key source of demand for new installations.
New homes, new construction.
Right. And that market is expected to remain sluggish through 2025, largely due to persistently high mortgage rates deterring new home purchases and construction.
Making houses less affordable.
Exactly. So while that large, stable replacement market provides a significant buffer against this cyclicality again, you have to replace a broken unit.
Mm-hmm.
A prolonged housing downturn definitely remains a headwind for top-line growth. It just impacts the opportunity for new builds.
Okay, so housing is a drag. What else?
Inflationary pressures. These are significant. Appliance manufacturers, including A.O. Smith, are contending with rising raw material costs.
Like steel.
Particularly steel, which is a major component in water heaters.
Yeah.
And on top of that, there's the reintroduction or continuation of tariffs on imported goods and components.
More costs.
All of which combine to create a challenging cost environment, squeezing margins. Management has actually guided for an approximate 5% increase to its cost of goods, so the direct cost of making this stuff just due to tariffs in fiscal 2025.
5% is significant.
It is, and along with that, they anticipate a 15% rise in steel costs during the second half of the year.
15%? Wow.
Yeah, so this raises that important question again. How effectively can manufacturers like A.O. Smith pass these increased costs on to consumers through price adjustments without significantly impacting demand?
The pricing power question.
Yes, exactly. It's a critical factor for near-term profitability and a true test of their pricing power, their brand strength,
Right.
and just how non-discretionary their products really are in a competitive market. It's a delicate balancing act.
Maintain margins, but don't kill sales.
That's the tightrope.
Okay. So you've got A.O. Smith with its incredibly strong North American core,
Okay.
a complex but potentially transformative international challenge and opportunity,
Check. China and India.
and a rapidly evolving industry driven by new technologies like heat pumps and regulations pushing decarbonization.
Check. Big shifts there.
It's a lot to navigate. Now, let's zoom in on who they're actually up against, especially in their most profitable foundational market, North America. Who are the competitors?
Right, the competitive landscape.
The North American water heater market is often described as an oligopoly.
Good term for it.
Think of it as a market where just a small handful of large established companies really call the shots.
Mm-hmm. High barriers to entry.
Exactly. Creating significant barriers for any new player trying to enter, mainly due to the immense scale needed, the distribution networks already in place.
Brand recognition.
All of that. It's not a monopoly. One company doesn't have it all, but it's certainly not a free-for-all either.
Dominated by a few big names.
And the market is primarily led by three companies. A.O. Smith Corporation, obviously, Rheem Manufacturing Company, and Bradford White Corporation. Together, they essentially dominate the landscape.
The big three of water heaters.
Pretty much. Let's dive a little deeper into these key competitors and their strategies because understanding them helps us appreciate A.O. Smith's position and challenges.
Good idea.
First up, Rheem Manufacturing Company.
A major player.
They're privately held, actually a subsidiary of Paloma Industries of Japan, and certainly one of A.O. Smith's most formidable rivals.
Head-to-head competitor.
Rheem boasts a comprehensive product portfolio that actually extends beyond just water heating. They're also big in HVAC heating, ventilation, and air conditioning.
Right, broader home systems.
Which gives it a broad presence in home services and construction. This diversification means they have multiple touch points with contractors and consumers, maybe more than just water heaters alone.
Could be an advantage.
Rheem is known for strong brand recognition. They have an aggressive acquisition strategy of their own and a robust lineup of innovative products, including their Proterra family of heat pump water heaters.
So they're competing directly on that high efficiency front.
Directly. They're a significant player in the decarbonization race as well.
Okay, so Rheem is a big, diversified competitor.
Then you have Bradford White Corporation.
Interesting company.
Yeah, they're different. An American employee-owned company. And they have really carved out a powerful and arguably a very defensible niche through their distinctive for the pro distribution model.
Right, you mentioned this earlier. What's the deal with that?
What's unique about them and what truly sets them apart is that they sell their products exclusively through wholesale distribution channels to licensed plumbing and HVAC professionals.
Exclusively,
Yeah.
so you can't buy one at Home Depot.
Nope. They deliberately avoid big box retail outlets entirely.
Wow.
Their strategy is designed to build deep, lasting loyalty with the contractor base. Those pros who, as we discussed, act as key influencers and decision makers, particularly in that crucial residential replacement market.
Ah, so they're betting entirely on the plumber's loyalty.
Exactly. By catering solely to the pros, they foster these really strong relationships. And Bradford White offers a full line of products, including high-efficiency tankless and heat pump models, so they ensure their loyal installer base has access to the latest technology within their closed channel.
That's a fascinating strategy, a different way to build a moat.
It really is.
So what's truly fascinating here, and what gives us maybe a deeper insight into the competitive landscape, is how these differing go-to-market strategies of the top players create this really nuanced competitive environment.
Yeah, they're not all playing the same game.
Not exactly.
Yeah.
A.O. Smith's multi-channel approach, going through wholesalers, retail, direct. It gives them the broadest market reach, allows them to capture demand from pros, DIYers, new construction, pretty much everyone. It's about maximizing accessibility.
Covering all bets.
Right. In contrast, Bradford White's singular focus on the professional channel fosters that deep-rooted relationship and loyalty, creating a formidable and arguably very defensible customer base, especially in the replacement market.
Harder for competitors to steal those plumbers away.
Much harder. So the competitive battle is fought on different fronts. A.O. Smith's advantage lies in its sheer scale and broad market access. Bradford White's strength is its specialized, almost exclusive relationship with the professional trade.
And Rheem is somewhere in between, but with the HVAC angle.
Kind of, yeah. Broad, but maybe less purely focused than Bradford White on the pro-channel loyalty. Now, when we look at market share, A.O. Smith holds the leading position in the North American residential water heater market. Estimates put them around 35% share as of 2024.
Number one.
Number one, the top three players, A.O. Smith, Rheem, and Bradford White, collectively control a significant majority of the market. Combined share estimates range from 60% to 65%.
Definitely underscores that oligopoly structure.
Absolutely. It's a concentrated industry.
So A.O. Smith isn't just a big player by accident. It has built significant, almost unassailable sources of competitive advantage, right? What investors call an economic moat.
Yes, they have several strong ones.
What are they? Firstly, their brand recognition and reputation must be huge.
Immense. With over a century of operating history, the A.O. Smith brand is basically synonymous with reliability, durability, quality, both in the minds of consumers and, crucially, those demanding professionals who install the units.
Right.
That fosters significant brand equity. When a plumber recommends A.O. Smith, as you said, it carries real weight. People trust the name.
Okay, brand is key. What else?
Secondly, their scale and distribution network. This is just a huge barrier to entry for any potential competitor.
That's hard to replicate.
Extremely hard. The company's vast manufacturing scale allows for significant economies of scale, meaning they can likely produce units more efficiently and at a lower cost per unit than smaller players. Furthermore, that extensive multi-channel distribution network ensures wide product availability through wholesalers, major retail outlets, direct contractor networks. Trying to replicate that infrastructure would take decades and, frankly, billions of dollars.
Like scale and reach. Got it.
And finally, their unwavering commitment to technological innovation. This is a core strength that keeps them ahead, especially now.
Investing in R&D.
Consistently. To produce innovative, high-efficiency products that not only meet but often exceed those evolving energy and environmental regulations, this focus on technology allows them to command premium pricing for their advanced products.
Like the heat pumps.
Exactly. And maintain leadership in a market that's increasingly defined by sustainability. Recent introductions, like their Adapt SC condensing tankless water heater with integrated scale prevention.
Fancy name.
Yeah, but it shows their commitment. They're not just selling basic water heaters anymore. They're selling advanced, energy-smart water technology solutions, positioning themselves very deliberately for the future.
Okay, makes sense. Brand, scale, innovation. Powerful combination.
Very powerful.
All right, let's pivot to the numbers then. We've talked a lot about strategy, markets, competition, but ultimately, how is all this translating onto the balance sheet?
Bottom line.
Exactly. You might be wondering, with all these complex challenges like China and these exciting opportunities like electrification, how is A.O. Smith actually performing financially? And what does this mean for their shareholders who are, backing these strategic moves?
Fair question.
Looking at their historical and recent performance, A.O. Smith boasts a pretty strong long-term track record. They've consistently delivered value.
They're known for consistency.
They achieved a revenue compound annual growth rate, TAGR, of 7.2% over the 5 years from 2019 to 2024.
Solid growth.
And an even more impressive adjusted earnings per share, or EPS, CAGR, of 14.6% over that same period.
Very strong earnings growth. Shows leverage and efficiency.
Yeah, those are robust growth figures for a mature industrial company. However, 2024, as we've hinted, did present some challenges. Full year 2024 sales were $3.818 billion, which was a slight decrease from the prior year. Largely driven by that weak economy in China, which we've discussed extensively, and also softer demand for water heaters in North America during the second half of that year.
Okay, so headwinds were real.
Definitely. Adjusted EPS for 2024 was $3.73, a 2% decrease from 2023, and that also included about $1.10 per share impact from some restructuring efforts they undertook in China and in their North American water treatment business.
So cleaning things up a bit, taking some charges.
Exactly. They faced headwinds, but also made strategic adjustments. But despite that slight revenue dip in 2024, they seem to be showing strong operational execution and resilience now, demonstrating their ability to navigate this turbulence.
How's 2025 looking so far?
Well, the first half of 2025 really demonstrated that resilience. In Q2 2025, total sales were $1.011 billion. That was a modest 1% year-over-year decline, so still slightly down.
Okay.
Yet, remarkably, the company managed to deliver a 1% increase in diluted earnings per share to $1.07.
So profits up even with sales slightly down. How?
Better margins. That North America segment margin actually expanded to 25.4%, driven by a favorable product mix.
Selling more of the expensive, high-efficiency stuff.
Exactly. Indicating consumers are opting for higher value, more efficient products, which helps profitability, and reflecting management's confidence amidst all these shifting currents.
Yeah.
They actually raised their full year 2025 guidance. They now project consolidated sales to grow between 1% and 3% for the year.
So back to growth.
Back to positive territory. And they narrowed their diluted EPS forecast to a range of $3.70 to $3.90.
That's a pretty confident outlook, given the global environment.
It really is. A strong signal to investors about their operational capabilities and maybe seeing some stabilization.
And a core, almost unparalleled strength underpinning all of this for A.O. Smith is its robust balance sheet and cash flow.
Rock-solid financials.
Absolutely. This is foundational to their ability to navigate these strategic shifts and market changes without undue pressure. They operate with very low leverage.
Meaning not much debt.
Very little debt relative to their size.
Yeah.
As of June 30, 2025, the company held a healthy $177.9 million in cash and marketable securities.
He's on hand.
Against total debt of just $303.4 million. This results in a very conservative total debt-to-total capitalization ratio of just 14.1%.
That sounds really low.
It's very low.
Yeah.
Provides them with immense financial flexibility. Think of it as having a significant war chest and very few liabilities, giving them lots of options.
Right, and they generate cash.
Prolifically.
Mm-hmm.
The company is a prolific cash flow generator, consistently turning sales into hard cash. They have a stated goal of achieving free cash flow conversion of over 100%.
What does that mean, conversion over 100%?
It means their free cash flow, the cash left over after operating expenses and capital expenditures, is actually greater than their net income. It demonstrates exceptional efficiency in managing working capital.
Wow. Okay. So where does that cash go?
Well, let's look at recent numbers. In the first 6 months of 2025, cash provided by operations was $178.3 million, and that free cash flow was $139.9 million. That was actually an increase over the prior year, mainly due to improved working capital management.
Getting even more efficient.
Seems so. And for the full year 2025, management projects free cash flow to be in the range of $500 million to $525 million.
$500 million in free cash.
Roughly. This strong and consistent cash generation allows them to confidently pursue their strategic objectives, from acquisitions like Purite to significant shareholder returns, all from a position of financial strength.
And it's this rock-solid financial strength that underpins their unwavering commitment to shareholder returns, right? That must be a key factor for many investors.
Huge factor, especially for dividend investors.
They have an incredible track record with dividends, don't they?
Amazing, having increased their dividend for over 30 consecutive years.
Wow. Dividend aristocrat territory.
Pretty much, it's a testament to that stable cash flow generation through various economic cycles. Shows a deep commitment to returning capital to shareholders year in and year out. The current quarterly dividend stands at $0.34 per share.
Okay, consistent dividend growth.
Yeah.
What about buybacks?
They do that too. They maintain an active and substantial share repurchase program. In the first half of 2025 alone, AOS repurchased 3.8 million shares for a total of $251 million.
Buying back their own stock.
Yep. And reflecting their ongoing confidence, management even raised its full-year 2025 share repurchase target to approximately $400 million. That's a notable increase from the $306 million they repurchased in 2024.
So they're accelerating buybacks. That's a significant vote of confidence in their own stock price, isn't it?
It really is. And this reveals a very clear and disciplined set of priorities for capital allocation within AOS.
What are those priorities?
First, they fund organic growth and innovation. They know long-term success comes from staying ahead technologically, investing in R&D, new products.
Makes sense.
Second, they are deeply committed to maintaining that growing dividend and the opportunistic share buyback program, rewarding shareholders, managing share count.
Okay.
Finally, they pursue strategic, bolt-on mergers and acquisitions that complement their existing business, like Purite.
So organic growth first, then returns, then M&A.
That seems to be the hierarchy. And the decision to significantly increase the 2025 buyback authorization is a very active capital allocation choice. It speaks volumes.
How so?
It suggests management views its own stock as a highly attractive investment right now, potentially offering a better risk-adjusted return than, say, a large-scale external acquisition, especially given the ongoing strategic uncertainty in China.
Maybe better to buy their own shares than risk a big deal elsewhere right now.
That could be the calculation. It's a very telling move that speaks directly to their confidence in the underlying value of the company, even with the known challenges.
Okay, so you can clearly see AOS is financially solid, a veritable fortress.
Absolutely.
But they're certainly not resting on their laurels. They have this clear, multifaceted strategy for growth designed to leverage their core strengths while expanding into adjacent markets and those cutting-edge technologies.
Always looking ahead.
Let's look at the pillars of their future. How do they plan to continue growing and adapting in this rapidly changing world?
They've laid out a pretty clear roadmap.
These pillars of growth seem quite strategic and interconnected. First, there's innovation and efficiency, right?
Core to everything now.
Aiming to lead with innovative and energy-efficient products that not only comply with, but proactively align with tightening regulatory standards and that growing consumer demand for sustainable solutions. It's about staying ahead of the curve.
Got to lead on tech.
Second, they're focused on capitalizing on global megatrends like sustainability and water quality, essentially riding the big waves of change shaping the world.
Aligning with the future.
Third, there's strategic global expansion, as brilliantly demonstrated by that pivot to India, moving capital and focus to where the growth opportunities look strongest.
Following the growth. Smart.
And fourth, they pursue disciplined acquisitions with a stated focus on transactions that either expand the core business, provide entry into new geographies, or add new technological capabilities.
Like water treatment.
Exactly, with North American water treatment remaining a stated priority for potential M&A. It seems like a very thoughtful, integrated approach to growth.
It does. It balances core strength with future opportunities.
Let's do a deeper dive into some of these key strategic elements, starting with the China conundrum, its strategic impact. We keep coming back to this.
Because it's central right now.
That formal assessment of strategic opportunities for its China operations, which began in July 2025, you said it's arguably the most important catalyst for the company in the medium term.
I really think it is.
Because the persistent underperformance of the segment, acting as that drag on growth and profitability, has undoubtedly weighed on the company's overall valuation, created that China discount in the stock price, potentially.
Right. Investors hate uncertainty and underperformance from a major division.
So this raises that truly important question. What happens both for A.O. Smith and for its investors if it successfully resolves the China situation?
What does resolution look like, and what are the implications?
Yeah. What could a decisive action like a full sale, a strategic spinoff, maybe entering into a joint venture with a strong local player, what could that do?
Well, theoretically, it could unlock significant shareholder value.
Oh.
Consider this. A clear resolution, whatever form it takes, would remove a major source of negative growth and margin pressure that has been clouding the company's prospects for a while now.
Bliss the cloud.
Exactly. This would allow investors to reevaluate the company based purely on the undeniable strength, stability, and higher profitability of its core North American business, and its genuinely promising growth trajectory in India. You'd be looking at a cleaner, more focused, higher margin company.
A clearer story.
A much clearer story. Such a successful resolution could serve as a powerful catalyst for a fundamental re-rating of the company's stock, potentially closing that valuation discount we talked about. The strategic decisions made here will resonate across its entire global enterprise and really redefine its international strategy for the coming decades. It's a pivotal moment for their global footprint.
Absolutely. The market loves clarity, as you said, and removing that China uncertainty could be huge. Okay. Next, let's look deeper at navigating electrification A.O. Smith's specific actions.
The other huge piece.
The accelerating transition to high-efficiency electric water heaters in its core North American market, propelled by that decarbonization megatrend and the big government incentives like the IRA, this represents, without a doubt, the largest growth vector for the industry, doesn't it?
It really does. This isn't just incremental growth, it's a paradigm shift.
So A.O. Smith's response here seems incredibly proactive and comprehensive.
They're not sitting back.
The company is actively positioning itself to capitalize on this trend, not just by having a few models, but with a broad portfolio of high-efficiency products, including both heat pump and tankless water heaters.
Covering both key technologies.
They are investing heavily in innovation to meet and even exceed future regulatory requirements, effectively future-proofing their product line. Management specifically noted, as you said, that upcoming product launches are being designed precisely to comply with those new, stricter Department of Energy efficiency standards set to take effect in 2026.
Getting ahead of the mandate.
Their ability to successfully innovate, to launch products that meet these elevated standards, and crucially, to capture a leading share in this rapidly expanding HPWH market.
That seems absolutely critical, right? It'll be a major determinant of A.O. Smith's long-term growth and market leadership in North America.
Couldn't agree more. This isn't just a strategy. For North America, this is the strategy for the future of the industry. They have to win here.
They have to win in heat pumps and high efficiency. And finally, we need to consider margin resilience amidst inflation and tariffs management's response. We touched on the cost pressures.
Right. Steel costs, tariffs.
This isn't a theoretical challenge. The company faces these persistent input cost pressures. They directly impact its cost of goods sold, putting pressure on those impressive margins we discussed. Management guided for that 15% increase in steel costs in the back half of 2025 and a full-year impact of about 5% on KGS from tariffs. These are significant headwinds that need active management.
So how do they fight back?
A.O. Smith's primary strategy for combating these pressures seems to be a combination of proactive pricing actions,
Raising prices.
and rigorous internal productivity and cost-saving initiatives. They can't just absorb these costs without impacting profitability significantly.
So raise prices and cut internal costs.
That's the playbook.
Yeah.
And if we connect this to the bigger picture, the ability to successfully pass through necessary price increases to customers without eroding sales volumes. That's the key test.
The test of brand strength.
Exactly. It demonstrates the essential nature of their products and the trust customers place in their brand. Maintaining its industry-leading operating margins in North America amidst these headwinds will be a key indicator of its operational excellence, its pricing power, and its durable competitive advantages. It's a constant battle, but their track record suggests they're pretty well equipped to fight it.
Okay. Managing costs and prices effectively is crucial.
Absolutely.
Finally, let's quickly touch on who's at the helm, guiding A.O. Smith during this pivotal time of both challenge and opportunity.
Leadership matters.
And what the broader market currently thinks of all these moving pieces and strategic gambits reflected in the valuation. There's been a very recent and significant executive leadership transition, right?
It's just happened.
Effective July 1st, 2025, Stephen M. Schaefer succeeded Kevin J. Wheeler as President and Chief Executive Officer. Mr. Wheeler transitioned to Executive Chairman.
providing continuity and experience at the board level while bringing in new leadership for the day-to-day.
What's the significance of this timing?
Well, this leadership change comes at an absolutely critical juncture for the company. And Mr. Schaefer, the new CEO, has his work cut out for him, but also, immense opportunity.
Big shoes to fill, big challenges to tackle.
Exactly. He takes the helm as A.O. Smith navigates that critical strategic review of its China business and manages the profound technological shift toward electrification in its largest market.
Two massive priorities right out of the gate.
Huge priorities. His strategic decisions, his operational execution, and perhaps just as importantly, his clear communication with the investment community regarding these key issues. It will all be scrutinized very closely by analysts and investors alike.
Yeah, the market will be watching him closely.
Intensely. His leadership will be instrumental in shaping the company's direction and market perception in the crucial years to come. It's a challenging but frankly undeniably exciting time for a new CEO to step into such a role at such a company.
Okay. And when we look at valuation insights, what does the market think right now? How is it valuing AOS stock?
Well, an analysis of A.O. Smith's historical valuation multiples indicates that the company's stock is currently trading at a bit of a discount to its own long-term averages.
Cheaper than usual, based on history.
Relatively speaking, yes.
Yes.
As of early September 2025, its trailing 12-month, or TTM, price-to-earnings ratio, the PE ratio.
Price relative to earning.
Right. It stood at approximately 20.2x. Now, that's significantly below its 10-year average PE of about 25.2x, and its 5-year average of around 25.4x.
Okay. So a noticeable discount to its own history on a PE basis.
Correct. Similarly, its TTM enterprise value to EBITDA, or EBITDA ratio, another common valuation metric looking at total company value versus operating profit. That was around 13.2x to 13.5x. That's also below its 5-year average of about 15.6x.
So multiple metrics suggesting a discount to historical levels.
That's what the data shows.
And how does it compare to its peers, other building products companies?
Good question. When benchmarked against a peer group in building products and specialty industrial machinery companies like, say, Lennox International, Franklin Electric, Pentair, Trane Technologies.
Okay, similar types of companies.
A.O. Smith's TTM PE ratio of roughly 20x is also below the peer average, which was around 23.8x recently.
Yeah.
And is well below the broader industrial sector average of about 27.1x.
So cheaper than its history and cheaper than its peers right now.
Generally, yes.
Yes.
So the market appears to be valuing A.O. Smith more conservatively than in the recent past.
Why? What's the interpretation?
Well, this relative discount likely reflects the market's pricing in of those specific challenges and the uncertainty in the company's rest of world segment, particularly China.
The China drag again?
That's probably a big part of it.
Yeah.
And maybe broader macroeconomic concerns affecting industrials. But for a learner like you, understanding this dynamic of the strong core of the growth initiatives, but this valuation discount might represent an interesting situation.
Especially if those challenges, like China, are effectively addressed.
Exactly, particularly if those challenges are effectively addressed and the company executes on its strategic roadmap for electrification in India. It's a classic case of navigating complexity and trying to see if the market is overly pessimistic about the challenges versus the strengths and opportunities.
Fascinating. Okay. Wow. What an incredible deep dive into A.O. Smith.
We covered a lot of ground.
We really did. We've peeled back the layers to see this century-old leader in water technology balancing its incredibly stable, immensely profitable North American core
It's like a cash cow.
with the turbulent and high-stakes waters of its international segments. We've seen that fascinating strategic pivot, potentially, from a challenging, structurally impaired China market
Big question mark.
to a promising high-growth story emerging in India with that Purei acquisition.
The bright spot.
And we've also explored the massive industry shifts driven by decarbonization and electrification, creating both huge opportunities with heat pumps and tankless water heaters.
The tech revolution.
And significant challenges with rising input costs and those evolving competitive dynamics.
Lots of moving parts. Yeah, if we really try to distill all of this down, A.O. Smith's future seems to hinge on 3 critical, interconnected factors that you should absolutely be watching if you follow this company or industry.
Okay, key takeaways.
First, the successful and decisive resolution of its China business. Getting clarity there will be paramount for valuation and focus.
Clarity on China. Got it.
Second, its ability to truly lead the charge and capture significant market share in that rapidly expanding high-efficiency electrification market in North America. Winning in heat pumps is crucial.
Lead in electrification, check.
And third, how effectively it integrates and grows its new Indian venture, building on that strong organic momentum and the Purite brand.
Execute in India. Makes sense.
Those are the crucial narratives and strategic decisions to watch as the company moves forward into what is arguably its most transformative period in decades.
It really feels like a pivotal time for them. So next time you take a hot shower, or even just grab a glass of filtered water from your fridge,
Yeah.
consider this. The warmth and purity you experience might be a direct link to this global corporation that's battling complex economic headwinds in Asia, investing heavily in cutting-edge green technology right here, and strategically reshaping its entire identity in a rapidly changing world.
Puts it in perspective.
How often do we truly pause to think about the complex, dynamic business stories, the, corporate dramas hidden right behind the seemingly everyday products in our homes?
Not often enough, probably.
What other boring household items might be hiding incredibly complex and fascinating corporate dramas right under our noses? It's kind of a reminder that even the most mundane products often have extraordinary stories behind them.
Absolutely. Business is everywhere.
We hope this deep dive has given you a shortcut to being exceptionally well informed about A.O. Smith and the dynamic, evolving water technology market.
Let's hope it was useful.
Keep those questions coming, and we'll keep diving deep.